The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. And I'll start the show off on a rather sad note, but, life goes on. Our friend Dr. Richard Smith, who had the malaria, passed away last night. And unfortunately, he couldn't get out of the coma. So he's in God's hands now. So everybody that prayed for him, thank you very much. Continue to pray for his family. He's got 2 little girls and a lovely wife. Anyway, we're going to talk a little bit about the stock market to start off with, because we are, setting right over the full moon. It starts late today in the UK GMT time, and then it hits us real early in the morning, tomorrow. So we're in the zone of the the full moon ever since we started on Monday, and now we are also, we're in the Bradley date, of course. We have not, gone above the high that we were looking at on Monday yet, but, we certainly could do that. We have a lot of divergence that is still out there. I'll be posting some charts into the, Tiger TV so you can take a look at it. We still have a major divergence in the NASDAQ. It's hit that 618 level now for the 5th time in the last 5 weeks. And as long as we don't go charging ahead, we'd have to get up over 30 or 40 points today in the NASDAQ for it to break out to the upside. And we would need the S&P to get above 1395 to 1400 in the futures, to get it to break out on the upside. But so far, the pattern that we were looking at in the cash S&P, that we were talking last week, and now we're right over this cycle that we're looking at is right spot on. We've had 3 drives to a top, right at the 786. So all of that tells us that this is, where we should be. Now that covers the stock market. People keep asking me, is the top end? Folks, I don't know. Neither does anybody else. All I can tell you is the patterns have lined up the way we wanted to. The cycles are there, so it either works or it doesn't. That's the bottom line. And it's just based on probabilities, nothing more than that. Now, I wanted to change gears here just a little bit, because I wanted to give you folks an idea of what some of the things that people use for their trading. I wanted to show you one particular setup that I happen to see live. It is 2 80-inch monitors, okay? And the 80-inch monitors, folks, that means it's 15 feet across. And when you see these, you won't believe, the quality that you have. They're just absolutely spectacular. And you have to set probably 15 feet away in order to get a good view, because if you get too close, you really can't do it. I think it's a little bit much of an overkill, but frankly, they're really for an entertainment center. The gentleman just actually hooked it up so that we could see what it looked like, on the chart patterns, as far as looking at it as from a computer. But it's really for a TV setup for a theater room is what it is. Now we have also a trading room from our friend William in Singapore, and I wanted to give you an idea of what this one looks like, because it's very very more realistic of what you really should look at. You're looking at 32-inch monitors. He has 4 of those and a couple of smaller ones. And, of course, he's watching about 10 different things trading. But this shows you, the cleanliness of his office. Everything is, pretty easy to use. And so these are some of the things you can do. You can start out with just one monitor. Believe me, when I travel with my laptop, I'm just using one monitor. And I really don't like to look at monitors, frankly. I look at monitors more than I usually do when I'm doing the radio show than any other time during the day. Now, I wanted to cover a couple other little things I think that are important here. I posted into the Tiger TV the fact that there has just been an announcement about MF Global, and the Senate, it comes from the Senate floor, if you can believe the Senate anymore, but there's a chance that people should get 90% of their money back. Folks, do not believe them until you cash the check. That's all I can tell you. I'm not sure what's going on there, but $1.2 billion is a lot of money. They supposedly found $600 million of it at J.P. Morgan, which really doesn't surprise me because they've probably been using the float on that since December. Not that that's a lot of money anymore, but that's one of the things we want to keep it in the back of your mind that if you do have an MF Global account and you get some of your money back, it will be a blessing. The fact that I'm saying we because I happen to be involved a little bit in this, but if they do get some of our money back, it will be a surprise to me based on what has happened. Now, the one at PFG Best, they're not so sure about because that money was used for other purposes, but so was the money at MF Global. So we really don't understand what's actually happening with that, but we will wait and see. Now, I posted the chart for Facebook in the Tigers TV today because people asked me several times, why do I think it's going to $14 a share? And if you'll take a look at it, you'll see that ABCD has now gapped down below the old low. It came off of the 382, as you can see, and it measures perfectly down to a 1.618 expansion, down at that level of, $14 a share. And if I'm right about the stock market and that we are going to be going down at least into September 1st, then we would have a pretty good chance for Facebook, to reach that level if, in fact, it really does. So I will put the chart for Facebook in one more time so that you folks can, take a look at it. And if I can find it, the probability is that I might not be able to find it, but if you'll give me 1 second, I'm going to be able to find it, and I will put it in. There it is. So one good thing about being an Italian, if you give me just a little bit of time, I can do it. Unfortunately, some of the time is going to be a little longer than we will probably live, but I will get it done. Here it's coming out now. And you'll see Facebook measures, beautifully down to that $14 a share level. It's gapped down below the old low that we had back in June, on June 4th, when we had the solar eclipse and the full moon. And now we are, setting over. Fact is, it's almost at the 127 now, so even it could possibly have a little bit of a rally. Now, folks, I'm very, very bearish the stock market, but I have to give you a caveat here because one of my colleagues knows that I'm very, very bearish, and he's concerned about my bearishness, which I really appreciate. But I wanted to post into the Tiger TV. It's a chart from the Bank of America's Global Research Department, which is part of Merrill Lynch, and it basically says that the sell side, we're at a very, very bearish bullishness on stocks. In other words, everybody is very, very bearish stocks right now. And that is usually a very strongly bullish indicator. The problem is that what I'm basing my things on are based on the patterns in the stock market and the Bradley model and the ratios. This ratio chart like that we're looking at here could actually, go down a lot farther. I don't know what's going to happen with it, but neither does anybody else. But it's making new lows from 1990. I mean, that's a tremendous amount. Now, this is important because volume is drying up. And there was an announcement today that I literally fell off my chair when I heard it. Lewis Bacon of Lewis Bacon and Associates, one of the largest hedge funds, is giving back $2 billion because they don't see any place to put it. And so that really surprises me because I happen to know Lewis Bacon and his brother, and for them to give money back is it's a big surprise. And I'm really going to be following this to see, what some of the reasons might be. Maybe some of the key people that were trading went out on their own. They might have retired, but there's probably something else there because people literally don't give $2 billion away, not when you're getting a percentage of return, on the money, even if it's not being traded. And if you are trading it and you do make money, you get a percentage on that too. So this is a very, very important article. I think that we have to keep our focus on. And if those of you in the Tiger community have any information on it, please share it with us because no one can be in front of the computer all the time, and we would like to know if in fact these things are actually going to be happening because it's a big thing when people give money back, and especially in our business. And that's one of the main things that that I follow is when people are not investing, it's very, very scary. Now, I'm going to show this chart today, and I'm also going to show it tomorrow during the futures hour, but it's basically showing you what's happening with the S&P futures. In other words, the open interest in the S&P futures over the last several days has been dropping dramatically, and this is a pretty big drop. And if this continues, it's telling us that players are leaving the market. And that usually is a bearish sign. So I'm following that, much like I did when I was following the open interest in some of these other things like gold and silver and some of the things that we watch. But this is important, and we'll cover more about this tomorrow. We'll also have Rich Anderson on tomorrow from Anderson Capital Management to talk about the corn crop and the bean crop. We've had a pretty big correction in soybeans. I posted into Tiger TV today when the show first started the chart on soybeans. I believe it was a hourly chart on soybeans, and it showed that the soybeans had made a beautiful Gartley pattern, and they dropped over $7,500 a bushel in a really short period of time. So there's a possibility that this move in the grain market might be abating a little bit, but we'll have more information on that from Rich Anderson tomorrow. Now we're getting ready for a break here pretty soon, and I'm going to change the format here a little bit on the second part of this. I'm going to show you how I'm doing some research in the astro area, and I'm using a specialized program. I'm going to show you, what I'm doing and how the numbers work. And, the fact that all this stuff is number related, it has nothing to do with, anything really esoteric or anything like that, but it shows you that it's really related to the numbers. There'll be a series of charts to look at and how I set these up and what I look for, and that this is how I set up the probabilities of a trade. And everything we're doing is based on probability. There's no certainty. There never is certainty. There never will be certainty. So if you're looking for certainty, go into, well, you can't go into medicine because they don't have certainty, and you can't go into law because they don't have certainty. I think the only one would probably be either garbage collecting or something in that neighborhood, because, funeral directors, their business never goes out of style. So both of those, you don't have to worry about that there will be business in those areas. But with trading, you don't know what the heck's going to happen, and it's not important that you know. All you need to know is the fact that, once these things, start to work, and they'll work more than they're failed. That's what you're looking for. You're just looking for that edge of trying to be able to, beat the market part of the time. That's really all you're, really trying to do. Now, I wanted to, give an idea of what's happening in the small cap market right before we come to the break here, and that is that, we've had 3 lower highs now in the Russell 2000 index over the past couple of weeks, and we're going to take a little break here, and then we're going to talk a little bit about some astro research. I hope you like it. If you don't, you can turn down the sound. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. you take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, folks, if you have any questions, 877-927-6648. This is Larry Pesavento for TFNN, and I posted into Tiger TV a picture of the Astro program that I use for, researching some of the things that we're looking at. This program has been available for a bit, but frankly, I've just started to use it recently, and it has got everything in it that you could possibly ask for. It's basically from Air Software. That's AIR, Air Software. It's Alfie Lavoie. And Sergey, I can't remember his last name. It's a long Russian name. And they are in Alfie needs no introduction to anybody in the astrology business, but he's about 6 years older than me, and he has been in astrology his whole life. And he's really done a great job doing this. But this is how I start looking at things. Is I take the program, and you'll see a lot of different things. You can do any of the planets or the lunar things that you want to do. It has a segment there for doing, the work with George Baer. And what I try to do, folks, is to keep it really as simple as possible. That's really what I'm trying to do. And if I can do that, then I know I'm okay. So when I first get ready to do something, I usually go to the lunar part or the Mercury part in order to, because I'm looking at the shorter term cycles, because I try to be risk averse so that I don't have to risk a lot of money on any trades, because I know that I'm going to be more profitable than I am losing, most of the time. So the first thing I'm going to do is I'm going to go to the program, and I'm going to click on the the things that I'm looking at. And right now I'm looking at the lunar aspects. As you can see that it's marked up there. There's a lot of things you see. I can look at all of the eclipses. I can look at some of the asteroids that are there, like Chiron, Ceres, Juno. Now Ceres, I don't know if you folks know this, but Ceres was the goddess of grain. And on top of the Board of Trade building at 141 West Jackson in Chicago, Illinois, on top of that building is a giant statue of Ceres. If you're ever over in the Sears Tower and look to the south, you can see the beautiful golden, statue that's sitting there. But anyway, what I'm doing here is I'm just going to go through a sequence in the lunar cycle just to show you, how we look at it statistically to see if we can get an edge. And that's all we're really looking for, is a statistical edge somewhere, better than 60%. 50-50, of course, is a coin toss. Anybody can do that. But even then, you can toss the coin the wrong way, 10, 12, 15, 20 times in a row sometimes. And that's, not what you really want to do. So the second part of what I'm going to do now is I'm going to be looking at the lunar aspects and how it relates, into two various, the houses that we're looking at. This particular one is going to be looking at Sagittarius, and the reason for that is that we found that there is a strong correlation between the moon and Sagittarius. In other words, there's a positive correlation. Now, each one of these has a very nice positive correlation, especially, Leo, and also is very positive. When the moon in Leo, the market goes up. But remember, these only happen for 2.5 days. So if it happens over a weekend, it's not going to make a whole lot of difference. But if it happens during market hours, then you really have something that makes it better than what you would like to do. So what we do is we start to run studies, and I'll give you an idea of what it looks like, and I'll put one up here just to give you an idea that I have data in this machine going back to 1950. And it does everything that we could possibly ask for. Here I'm looking at during 2009 into January of 2009. I'm looking at the moon position. On the bottom of the chart, you'll see it in different colors. It gives the sign of the zodiac inside the middle of the color. You'll see blue, and then you'll see a darker blue, then you'll see a coral color, then gray, and then light blue, and then coral color. It gives different ones for the 2.5 days that the market is in those signs. And then what we do is we run studies. We put the Dow Jones in there. We ask the question, what happens to the Dow Jones when the moon is in Sagittarius? And it'll go back into as many days as you want, and as you go back to 1950, so you're looking at 62 years, times 12, so you'd be looking at a whole lot of samples, statistically, so you'd know that it would be, pretty accurate, and it'll tell you, whether the sample size tells you that, 62% of the time this is going to be right. So this is how we try to put the numbers in your favor. And remember, when we're doing this, we're basically looking at the lunar cycle. Remember, that's only 28 days, and when you're looking at the houses, that's 2.5 days. Each time, it changes the houses, when it goes from, to Cancer to Leo, that tells you that, you've been in for just a short period of time. Okay, we're going to take a break here to pay a few bills, and we're back, and I'll show you an example of what this final product looks like.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had have been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks. 877-927-6648, and the final chart that I put in shows the final results of looking at this particular lunar cycle that I'm using air software from Alfie Lavoie, and it basically has gone and told me that during this period of time that I'm looking at this lunar cycle that I posted here, these are the results. And then on another page, what it will do is it'll come up and show me statistically how many samples I looked at, what was the probability of it working, and it'll give you an idea that, you know, these things do have a positive expectation. And that's how I do that. I do that through the lunar cycles, I do it through Mercury, and I do it through Venus, and I do it through Mars. And then, of course, you know, we also look at the Bradley model. And, you know, as we well know, we believe that, you know, we are near something, you know, pretty significant here in the Bradley model. You know, so far it's done, you know, what we expected it to do. Now, if the market moves higher than, you know, say 1395 to 1400 in the S&P, that would tell us that most probably, we have made a mistake here. Not made a mistake is the fact that the Bradley would just flat be wrong. But we have so many divergences here. It's going to take something really dramatic, and we certainly could get something really dramatic. If you remember when I started this show, I featured one of the charts from Bank of America's Merrill Lynch division, showing you that we are incredibly bearish in the stock market on a consensus basis. That usually yields to a rally. But frankly, I have to stick with what I know, and all I know is the patterns, the ratios, and the Bradley model. And until the market, rallies strongly, I have to stick with my bearish position. I appreciate all of you that have, sent me emails, praying for my sorry soul. And I understand that I can be wrong quite a bit, but this is what we're here to do, is to try to see if we can get some of these things right. This is not one of those times where I'm lacking in opinion, because we really are at a very, very critical level. For those of you that are relatively new to Tiger TV, I will put in the Dow Jones and the Bradley model one more time, and you see we've completed the pattern up at the 786 at that 13,120, and if we get above 13,200, I would almost assuredly think this would be wrong. But right now, the patterns and ratios tell us that this is where we should be. We should, coming down into September, maybe go flat, and then, after October 1st, we're looking at some really nasty things that are coming in here. So maybe we'll just hang in here and do very, very little. With the volume, the way that it's going, in the stock market, it's just amazing how it's drying up, and when we can see that in the futures. The S&P futures are, losing open interest, and that's, very, very important. Remember what happened, when gold and silver was losing open interest, when they were cresting, silver was cresting in April, and then later in the fall, gold was cresting at that 1930. The open interest was dropping, and that means players are leaving the market. You don't get these things to go up unless you got some people ready to buy it. If things don't go up, they drop from gravity, and that's what we're looking at here. Is a potential for this to drop just from gravity. Whether that's going to happen, no one knows this. All we're doing is we're looking at the probabilities of the things that we're watching. Now, I want to go to the bond market, because I'm getting more and more bearish on bonds all the time, because the news should be very, very bullish to bonds. They're talking about another potential QE3. They're giving bonds away in Europe for no interest at all, negative interest in France. And the $64 question, and I'm not sure that we have the answer yet, but I do know I don't know for sure, but I feel pretty strongly that if we can go below the low we made earlier in the week, which is down the 149.12 level in the bonds, we're trading at about a little better than a point above that right now. If we break below that, that would be the first time that we have broken below a significant Fibonacci retracement. And that retracement went back to the June 4th solar eclipse and the full moon. And now we have the full moon coming in here on August the 2nd. And so if we do have a little up move here and then it starts down, then we're going to be looking at something, even more sinister in bonds. But the odds of the bonds making a major top here is quite good. Just by looking at the notes in the bonds, that's just my opinion. But remember, I've been looking at a top for this for, since May, and, here we are in August. So, we've got a call from Philadelphia. Are you there, John?
Good morning, Larry.
How are you this morning?
I'm doing excellent, and you sound like you're doing the same.
Yeah, every day. I always try to keep on the grass side of the lawn. That's the best part.
Get out that mower. Get out that mower. Hey, Larry, wanted to ask you, a couple of days have passed. I actually spoke with you about this, maybe, 30, 60 days ago, copper. Does your looking at the patterns on the weekly tell you anything at all, one way or the other?
Well, I'll tell you what I'll do. I will take a second here to look at it. I do not trade copper very often, but when I just first glanced at it right here, it looks. I'll tell you what it looks like. It looks as bad as the chart for the Russell 2000. I mean, we came down and we stopped at a pretty good level, and the copper has only rallied like 10 or 12 cents a pound with the rest of the stock market going straight up, John.
Yep.
You know, at least since June 4th, and you know, we really did nothing. You know, we're within just a few cents of where we were on June 4th.
Yes,
you know, and so that tells us that, you know, this is not a very, very bullish sign for copper, I don't believe.
Okay. So nothing of interest to you then is what I hear you're saying.
No, just looking at the weekly chart, you know, about 6 weeks ago, we had a rally that went from, you know, $3.28, and it got up to $3.55. That's a 17-cent rally. That's virtually nothing in copper. And then we've given, you know, 20 cents of that back already. So that's not a bullish sign. That's a very bearish rally, in my opinion.
Okay, I appreciate those comments. I might ask you, if you have time for one more, a name that is of great interest to me in here is Silver Wheaton. The ticker on that is SLW. I'm wondering if you've done your chart work on that particular name.
No, I've heard of the stock before, but, you know, frankly, you know, I'm basically a futures, and it's SLW. Is that what it is?
That is correct.
Yeah, so is it a silver stock?
It is.
Okay, let's take a look at it on the daily basis first. And then it looks at it like it's had a pretty good day today. It looks like it's had some type of reversal move. Oh, wait, you know, I've done this stock before. It's just been a long time ago. Hold on one second.
I knew you have.
Well, I just, yes, I remember, because we had, I think you might have called in the day that it made the Gardley down at $25 a share, and then we rallied about 10%. And now it's in a sell mode, in my opinion, because we have the two lower tops that are here, and the last one that came in yesterday was at the 28.30 level, and then today's low was a perfect 61% retracement of the low we made last week. So, you know, you have a higher bottom, so it's in a little bit of a trading range now. But, you know, I'm basically, you know, this time it's a real quandary, because I'm bullish gold. You know, I really believe if gold can get above the 640, 650 level, I think it's got a really good chance of going higher. So with this one, you know, today's low was right at the 61% retracement, and we've moved, well, 3.5% in just a matter of a few hours. So, you know, it held up relatively well. Fact is, I posted early this morning, I posted the silver chart into the Tiger Den, because it had such a really, beautiful pattern on the hourly chart, I believe, and it showed that, you know, we had a pretty good 61% retracement that it had just filled, and I think that's what happened with Silver Wheaton today. So we'll see if that's the case.
I appreciate your thoughts, Larry.
All right, my friend. It's always good talking to you. How's your weather there? I hear you're getting some rain today.
Yeah, you know, the East Coast has been a hell of a lot better than the Midwest, so you can't complain about that.
Yeah, I know. We're finally getting some sell-off in corn and soybeans today, but they've moved so much that the damage has been done in corn for sure. It's just a question of what supply and demand does it. Tomorrow we're going to have Rich Anderson on the horn here from Anderson Capital Management, because he's in the business. Well, besides his hedge fund, he's in the business of farming and cattle raising and stuff. We're going to talk about some of these things and where we might go from here, because we're
excellent. I'll look forward to that. When you do have him on, I'm going to just put in a personal request that you ask him to tell us listeners his thoughts on the cattle and the pork markets. That'd be great.
That's one of his specialties, so I think he'll be able to do that. I'll take care of that tomorrow, John.
Thanks, Larry. I appreciate your time, sir.
Okay, thanks for calling in. Okay, the bullishness that I have for gold and silver, you folks know, is because we came out of that triangle, and I thought that if we could get down into that 1585, and we still might, in the gold, that would be a really nice retracement level to take a look at. Now, we made that level today in the silver market. We did come down and hit the 61% retracement, but the 61% retracement on the gold market from the last move, is way down at that 585 level. 1585 level, and that tells us that we've got a long way to go. All we did today was go just a little bit below the 382 level of the last move in gold, and that tells us that we have a potential for a bullish move here, because it's just backed off so little after moving better than $65 a contract on the upside. So if gold can get above that 1640 to 1650 level, then I think we've got a chance for gold to really go crazy. I think that would be the thing that would make the possibly the euro go into the the tank. We're looking for the euro to eventually get down to the level of 118, 115, and even par. That's really what what you're looking at. Now, I've had a request to look at Priceline, and I loved that stock because someone that I knew, Mr. Shatner, was the sponsor of this, and he made an absolute fortune on this because he took all of his income in stock, and this thing went absolutely to the moon. And not that he needed the money or anything, folks, but frankly, it's had a tremendous run. This is not for the faint of heart. This is, if you were to ask me right now, I think we're in the midst of a really major correction in Priceline. I'm going to put the ABCD pattern on the Priceline chart because it goes from 700 down to the 550, and then we rallied up, and it looks like we're heading down about another $120 in Priceline. And that would be, coming in at a 61% retracement off of last year's lows that were down around 413. This is not for the faint of heart. As I recall, this stock is very difficult to short because there's not a lot of borrowed stock around. That's what I remember. Now, remember, folks, I am not a stock trader. You need to ask Tom or Ken Shreve or Kate or Basil because they would know more about that. I do futures and I do Forex. And when you get me outside of that area, you're on your own because a lot of these things, I can see the charts, but I don't know anything about the volume or liquidity or, anything of that nature. That's, all I'm looking at that particular point is, to see, what the chart pattern is. So Priceline looks like it's in a major correction mode. I would be looking at it, if you wanted to buy it, I would wait for another $120 to the downside. And, when you're trading at 600 and change, that's not very much. So this is my opinion of Priceline. If you have any calls, it's 877-927-6648. Now, I wanted to get back to the bonds here for a second and get into the notes because we have a situation here where the notes have made new highs, but the bonds have not. And that's the, they haven't made it by much, but they did make new highs. And they only made it by a few ticks. So that sets the potential up for a possible double top. And we have to watch that, very, very closely. The ABCD that we made was completed, back on June the 4th, which was, I keep mentioning this, but it was the full moon and solar eclipse. And then we had another high that was made just 4 or 5 days ago, and since that time, we've really gone nowhere. And so this is what we want to watch very, very closely, because once we get below the lows of this week, which would be 149 in the bonds, and it would be below 133 and a half in the notes, I think we're going to be heading to the downside, in earnest. That's what I'm looking at anyway from a short-term perspective. So the next thing I want to cover, of course, is the volatility index. And I'm going to have to take a technical break here because I've had a breakdown. I'll be back in a second.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks. Sorry for that break, but we have monsoon rains here in Tucson this time of the year, and I have a surge protector, and my surge protector was telling me I had about 4 seconds, and that's why I had to quickly try to save what I had up on the screen. So everything's okay. I put up the chart for the volatility index because I think we've made a relatively good bottom down there. In other words, I think we're going to see more volatility coming in, and potentially on the downside if this full moon, stops the market like we think, and also the Bradley. The Bradley is more important, than the full moon. I've also posted into the Tiger TV. Someone asked me a question about other markets in the world, and I happened to be chatting with someone in India today, and he was showing me his charts. From the one is the Indian stock market, and the other is a stock from India. It's an electronic stock, but if you take a look at it, you'll see that the patterns are no different, than what we have here. They're all beautiful little ABCDs. The retracements are usually 618 or 786, and the expansions are 1.27 and 1.618. You know, these are nothing really changes in any of these markets. You know, they don't work all the time, as I keep saying, but you know, the probabilities are such, you know, that they will put the odds in your favor, and if you use adequate risk control, you know, you should you know, be ahead of the game by the time, you know, you come to the end of your you know, your trading career, whatever that happens to be. So these patterns work in all markets as long as they're liquid. Now with IPOs, like we had with Facebook, you know, I always say to people, don't go in the first day, you know, wait a day or two until, you know, something happens. That's because the emotionalism and the hype that we have, you know, from the CNBC people and Bloomberg and everybody else, Financial Times, you know, that hype is how they market these things, and that's why you've got to be incredibly careful. I've shown the relationship between Blackstone, what happened in 2007, and again with Facebook. These were, you know, different companies. One was a hedge fund, you know, another one is, you know, social media, but, you know, the stock prices are the same. So that's the only reason that we're doing this, is to realize that nothing in this world changes. It's always the same. I've been doing this for, you know, 6 decades now, and frankly, folks, there's nothing any different. And you can go back into the 20s or the 30s or the 1800s using railroad stocks and, you know, some of the others you'll see, and the old oil stocks like Standard Oil and Marathon. They're all the stock charts are the same. You know, the volatility will change a bit, but the ratios and proportions will always be around, and the patterns will be around. And that's what we're, you know, really looking for. Now, I've only got a couple minutes left in the show. I want to reiterate that it's very important that if the market does explode out of here, and it certainly could, you know, you don't want to stand in front of it. So if we get above that 1395 level in the S&P futures and above 13,200 or 300 in the Dow Jones Industrial Average, the Bradley model is most probably going to be wrong, and we don't want to be there, boys. But if we're right, have a good day, and may God bless.